Let's take a look at your market news now. Asian shares neared a 20-month high on Monday, this following Wall Street's extended run of record peaks on solid U.S. economic data and liquidity injections from the Federal Reserve. There's upward pressure on oil prices. Oil fields in southwest Libya began shutting down after forces loyal to Khalifa Haftar closed a pipeline. This potentially reducing national output to significantly lower levels. Japanese stocks rose on the day on the back of improved sentiment. This as the Bank of Japan started its two-day monetary policy deliberations. The Nikkei share average closing the day at 0.18% up to 24,083 points. Hong Kong stocks fell. This was led by consumer stocks, a reflection of pessimism towards the local economy. The city's tourism industry has taken a serious knock due to the prolonged anti-government protest action. The Hang Seng Index declined by 0.9% to end at 28,796 points. Chinese stocks closed higher today on hopes that authorities there would provide further stimulus. However, tourism-affected stocks declined on news of a deadly flu-like virus that's hit the country. The Shanghai Composite Index ended the day up 0.7% at 3,096 points. US stocks continued surging to all-time highs last Friday, with technology shares leading the charge. The signing of that US-China Phase 1 trade deal and some good earnings coming out of the earnings season boosted investor sentiment. The Dow Jones Industrial Average rose 0.2% to 29,348 points. The S&P 500 was up 0.4% to 3,329 points, while the tech-heavy Nasdaq advanced by 0.3% to close at 9,389. Let's get more from the markets. We cross to Arabile Gumede, who's standing by the Johannesburg Stock Exchange. Arabile, very good afternoon to you. What's moving the market this afternoon?
Yeah, it's a good afternoon to you, Nzinga. So a lot of, focus will sort of be on the World Economic Forum, which of course kicks off this week. Any important words and important sort of sentiments as well that are shared out of that dialogue will certainly be quite key and significant. Of course, out in the snow, maybe the brains don't necessarily work all too well when that's frozen, but we'll certainly see what exactly comes out of it and see if anything productive as well is helpful for South Africa. For South Africa, we do know, of course, that Finance Minister Tito Mboweni is leading that delegation, with President Cyril Ramaphosa staying at home, so that will be quite significant on that front. And more job losses then. Merafe and Glencore, with their joint venture out at that smelter out in Rustenburg, means that unfortunately around 665, if not more, workers have certainly lost their jobs, or they will be losing their jobs, with a Section 189 then officially being issued on that front. So we'll unpack all of that detail and exactly what is going on that front there as well. All of this and a whole lot more still coming up. But first, let's check in on the numbers and see exactly what's faring there, and we'll get into it right after this. Well, as you can tell there, that market picture certainly telling you how things are faring. A bit of weakness in South Africa's currency then as well, around more than 0.5% lost as well by lunchtime with regards to its trade. But let's bring in Gary Boyson then from Rand Swiss as we get to unpack this picture perhaps just a little bit more than as well. Gary, thank you so much for the time. So hasn't been the greatest time for South Africa's currency, but it was pretty stable for a while at around 1440. Now weakening. What's bringing that about?
Yeah, so I think everyone was very surprised going into the new year that we were trading around 14 rand to the dollar. Yeah. And I think a lot of it was international factors. So a lot of it was the optimism around the US-China trade deal that helped to just buoy, certainly emerging market sentiment, and that, because of the liquidity in our currency, it acts often as a proxy for the developed market, emerging market trade. So when people are optimistic about emerging markets, they actually come and buy our currency, although it has nothing to do with the fundamentals of South Africa. So what we're seeing now, I think, is a little bit of a subsidence. Part of this has got to do with local factors, definitely. So I think issues around state-owned entities are still very, very present in certainly traders and investors' minds. Also, just looking at, I suppose, the general policy uncertainty that South Africa is facing. This is certainly a concern. And if you actually look at where the local unit is, given historic levels, it did look a little bit too strong. That said, if you look at PPP, which is purchasing power parity, the Economist always releases it's kind of a tongue-in-cheek look at it through the Big Mac index. We are at the moment the most undervalued currency on the planet. So there's potential that we could have held on to those gains so long as the headlines had been a little bit more favorable.
So what do you think is fair value then for the local currency, would you reckon?
It's so difficult to tell. So if you're looking at PPP, PPP takes into account just the differential in the pricing of goods overseas and here. And in the long term, we should approach PPPs. So in the long term, you'd almost expect the local currency to strengthen. Unfortunately, the market price is something that traders are looking at all the future impacts that could potentially come along, not just the historic data, and they're trying to forecast what is going to happen. So what the market is telling us is they are very pessimistic on the fundamentals in South Africa. Looking at, I suppose, the big events coming out. I mean, obviously we've got the potential ratings downgrade coming just towards the end of March, and that is a large and very uncertain event. So while there's a huge amount of literature and a lot of analyst opinion around how this is going to impact our currency, nobody knows. And because no one knows, I think people are being a little bit more cautious. You might actually see the currency strengthen as what happened. It happened in Brazil when they were downgraded. The real actually strengthened. So you might see the rand strengthening as that kind of risk event comes out of the market. But as to where the fair value of the currency is at the moment,
pretty tough one.
Very, very tough. I would say the range is clear for trading. So if you anywhere near kind of the low 14s, that's a time to buy international and hard currency. Anytime you're out above 15, that's a time to bring currency back.
Sure. Okay. Well, certainly interesting one there. Quickly as well, the oil price jumping around 1% or so as well. Unfortunately, we have just lost the feed, so we'll try to get that in just a moment as well. But that oil price jumping around 1% on the back of Libyan sort of tensions as well. That certainly has hurt, and that will continue to hurt us quite a bit.
Yeah, so I'll try and paint you a picture of what's happening on the oil price. So, basically we had a very, very weak, very strong oil price going into the beginning of the year around the tensions between the US and Iran and the potential disruption of supply in Iran. What's happened now is we've seen a fairly strong at least weakening of the oil price back down to about $65 a barrel. Now that, in part the lack of disruption, but now with the Libyan news, we've seen a slight weakening. So we're back at about $65 a barrel, which is, it's not a significant weakening. It's a big weakening given what's happened, for the week, but certainly not for the month. Basically, there's been a blockade around two of the oil fields in the southwest by one of the military generals that potentially could take oil supply out of the market. Libya only produces around 1.2 million barrels a day, so it's not significant in the overall picture of OPEC, and Saudi Arabia should be fairly comfortable in increasing its production to fill any stopgap, and that's why you haven't seen a dramatic move in the oil price. We're not by no way above $70 a barrel again. It's a marginal weakening.
I mean, it certainly hurts them though, right? It does hurt Libya because they go down to plus minus 720 odd thousand barrels per day. So that could certainly be significant for them as a country. Let's get into some equity news then. Glencore, not so long ago, was a massive entity, and now having to shave off a whole host of people as well in the Rustenburg area. Them and of course that JV as well with Merafe Resources.
Yeah, so if you look at ferrochrome, so this specifically this is a ferrochrome smelter, and the process of converting chrome ore into ferrochrome is an incredibly energy intensive process. So what you've got here is really a situation where Glencore, which is obviously a multinational, it's the largest commodity trader on the planet. Where they're looking at the situation in South Africa. They're saying NERSA has put through, I think it's a 9.4% increase currently. There's also another 4.4% worth of tariffs that have been been added as well. At the same time, electricity supply, as well as being a lot more expensive than it was previously, there's also a lot of supply disruptions. So to have a ferrochrome smelter, operating at this level, they've announced they have to do some sort of restructuring. Costs are increasing, and they have to recoup it. They can't run it at a loss, obviously, and they've got to rationalize.
At worst, then they say, they're hoping that they don't have to close it down. They're hoping that they can still keep things open for now.
Absolutely, and I think if you look at any large diversified commodity miner, they want to work in places where they have rich ore bodies. They want to work here. Unfortunately, if your costs are not making sense, you have to shut the operations. Those directors have a fiduciary responsibility to shareholders to make the best decisions with their capital. So if the situation on the ground becomes so untenable that they can't operate there, it is their responsibility to remove those operations. And unfortunately, that's where we're sitting with Merafe and Glencore.
Very quickly on another one, is Naspers still cheap at these levels? And it's the 4,000 rand question, if you want to call it that.
Yeah, so it's a difficult question as well. So there's many ways of valuing Naspers, and I think with the unbundling of Prosus, everyone was hoping to see that the discount to its underlying asset, which is Tencent, re-rate significantly. It's what management has been trying to do for a significant period of time. So far, we've had the unbundling. We haven't seen the re-rating. So if you're comparing Naspers purely to its underlying assets, it looks very, very cheap currently. It does look very, very cheap. At the same time, we do have the CEO, Bob van Dijk, selling around R1 billion worth of share options. But it's always difficult to see.
What does that do for a share like that? What does that do for any share, I suppose, when a CEO or an executive or anybody of that sort of sells shares in a big company like Naspers?
So there's really two factors at play. So the first one is if a CEO is selling, there is obviously, especially if they're doing what's called an open market operation, they have to sell that into the market. So they create, if it's a significant block of stock, they will create an overhang on the stock. So if the volume, if the volumes of shares traded every day are fairly low and their block that they're selling is quite high, it takes time for that block to work out of the market. We saw the same thing with ShopRite. Once that selling is done, you normally see the prices elevating post sale. At the second component of a CEO selling is just what does it mean to the direction of the company? Does it mean that Bob van Dijk is no longer confident of the future of Naspers? Now, we're just chatting about it off air. Bob van Dijk, even though he's selling R1 billion worth of Naspers, part of his contractual commitment is that he has to have at least 10 times his salary in Naspers shares. He still manages to maintain that commitment even after selling R1 billion. At the same time, he's also going to be buying Naspers bonds, so he's still very invested in this company. And I wouldn't take this as a signal that he's potentially concerned.
Just give me a portion of the sale of the stocks that he made. I think I'd be happy for a little while.
I think a lot of us would be.
Gary, thank you so much for the time, but really appreciate it. We didn't get to chat about Davos, but that, of course, does kick off as well tomorrow. The World Economic Forum does happen, of course, from tomorrow onwards then in Davos, Switzerland. A whole host of guests as well. We do have those lined up for you. My colleague Diabo Seto is indeed in Switzerland, and she will give you the latest out of that. For now, though, that is where the buck stops, right here from the Johannesburg Stock Exchange. We'll be back with you again tomorrow. Of course, my colleague Nzinga Kunta joining you right after the short break. Stay tuned.